Hello friends, TK this side. In this tutorial video on stock market for beginners, we will learn what is fundamental analysis, we will learn what is technical analysis, and we will learn about it. At the same time, we will cover some examples so that you develop an insight what is fundamental analysis and what is technical analysis and what is the difference between these two approaches to analyze the stock. Friends, do not forget to like the video, subscribe the channel, hit the notification bell for updates. Let's begin. Why we do the analysis in first place in the stock market? As a trader or as an investor, our sole aim is to know what is the future price action in the market, whether the price will go up or not. If we are an investor, whether we will get the proper returns in the stock in which we are investing. This is broadly the sole aim, whether we adopt the fundamental analysis as an approach to analyze the market or adopt the technical analysis as an approach to do the analysis in the market. So fundamental analysis versus technical analysis, both are proven method to do the analysis in the stock market or do the stock specific analysis in the financial market. Although the end objective of both kinds of analysis is the same, to determine the future stock prices in the market, but they are entirely different in their approach. Let us first understand what is fundamental analysis. Investment in the stock market is all about investing in a business which is fundamentally sound. Stocks are only the means to invest in the sound business. So fundamental analysis aims to determine the soundness of the business with the sole aim to determine the intrinsic value of the stock in which we want to invest, to determine whether the stock at the current market price is undervalued, overvalued, or fairly valued. So the fundamental analysis is a complete process where we check the past performance of the company. We further check the possibility of future growth in the company in terms of earnings, in terms of revenues. We check the assets and liabilities, debt equity ratio to determine the overall financial health of the company. Then we do the valuation of the stock at the current market price to find out whether this is the right time to invest in that stock. A stock should be undervalued so that we get the proper price. Once Warren Buffett has said, what we pay is the price, what we get is the value. So we need to have a value stocks to invest in the stock market. That is the aim of the fundamental analysis. Then we check the quality of the management who are managing that business. So everything what we discussed just now comes under the umbrella of fundamental analysis, or these are the matter of sharp scrutiny when we do the fundamental of the stock or fundamental of the stock market. Even the economic condition is also considered when we do the fundamental analysis. So in nutshell, we can conclude it evaluates the soundness of the business with the sole aim to determine the intrinsic value or fair value of that particular stock. Now let us talk about what is technical analysis. Technical analysis, although the end objective is the same, to determine the future stock price in the market so that we can take a decision for investment or trading into that particular stock. But technical analysis is totally different from fundamental analysis. The basic assumption in technical analysis is price is God. If price is God, God knows everything, which means the price discounts everything known in the public domain, whether it is a fundamental of the business or any news relating to that particular stock is well known to the price, and price discounts everything which is in the public domain. So technical analysis uses the stock charts where price and volume is put to analysis. The historical price action, historical volume action becomes the sole parameters to arrive at the future price action in the stock market or that particular stock. However, it uses several other indicators and oscillators relating to momentum of the market, volatility of the market. In my opinion, the technical analysis can well be defined the study of price and volume with historical price action. And when we club it, the price and volume action with the study of momentum and volatility of the market, accuracy becomes a little better. So now we will take an example of one stock from the US stock market, that is Alphabet. We know it as Google stock. So we will do a little bit of fundamental analysis so that you as a beginner in the stock market have an overall insights as to what we look into the fundamental analysis. And then we will go to the price chart of Google stock or Alphabet stock to do the technical analysis briefly, so that by the end of this session, you better understand what is fundamental analysis and what is technical analysis. We will first check the broad fundamentals of Alphabet stock from the US stock market, so that you as a stock market beginner can understand broadly and briefly the process of fundamental analysis. So first we will check the past performance of this particular stock. We are looking at the ROE, which is nothing but the return on equity. ROE of this company stands at 22.5%, which is much higher than the industry, which stands at 7.8%. Here, two things we look into. How it is ROE is comparing with the overall performance of the industry. And secondly, any ROE more than 15% is considered good. And if it is more than 20%, it is considered very, very good. So it is 22.5%, which is considered higher. Now we look into the return on asset. Now, return on asset is comparable with the industry. So return on asset of Alphabet is 15.3%, while the industry is 4.8%. Here too, the past performance of Google or Alphabet looks very good. Now we will check the return on capital employed, which is called as ROCE. Now last year ROCE of this company has been 24%, while 3 years ago it was 15.5%. So ROCE anything more than 15% is considered good. And moreover, here what we see, 3 years ago it was 15.5% and last year it was 24%. So ROCE is improving over the years. Now we will check the possible future growth of Alphabet. This is, of course, is estimated. So company's revenue, annual revenue is likely to grow at 13.1%, while the industry is likely to grow at 15.9%. And overall US stock market, as a broader US stock market, earning is likely to grow at 15.6%. So yes, Alphabet earning is likely to grow at a good pace of 13.1%, but it is slightly lower than industry and the market. If we check the forecast on annual revenue growth, so revenue of Alphabet is likely to grow at 9%, while the industry is likely to grow at 9.2%. So more or less, it is likely to grow at the pace of industry itself. But it is better than the overall broader US stock market, which is likely to grow at 7.4% in terms of revenue. So broadly, we can say the future growth of Alphabet looks good. Now we will check the financial health of the company Alphabet. Now, if we see the current asset or short-term asset of Google or Alphabet stands at $161.99 billion US dollar, while its short-term liability stands at only $68.85 billion. and long-term liability stands at $39.74 billion, which means the short-term asset far exceed the short-term liability and long-term liability. So fundamentally and financially, it is looking good. Now we will check the debt equity ratio of the company. This blue curve represents the equity, while the red color represents the debt of the company. So at a glance, we can see equity far exceeds the debt over here. So debt equity ratio currently stands at 4.5%, which means the company has more cash than the total debt. At the same time, debt coverage means the company's debt is properly covered with operating cash flow, and the interest payment on the debt is covered by earning of the company or EBIT of the company. So interest payment is also not at all a concern for Alphabet as a company. Now we will check broadly the valuation of the Alphabet company or stock at the current market price. Now there are several valuation parameters we use for looking at the valuation of a stock. Like we check the P ratio, compare with the industry P ratio. Then we check the price to sales ratio. We check the price to book ratio. We check the PEG ratio. There are so many valuation parameters that can be looked into. But for this tutorial on stock market, for the stock market beginners, we are containing ourselves to comparing the current market price of the Alphabet stock or Google stock with respect to the fair value or intrinsic value of the stock. What is the fair value of stock? It is considered on the basis of the future cash flows. For this estimate, normally the discounted cash flow model is used. So current price is around $120.55, while the fair value is calculated at 160.35 based on the discounted cash flow model, which means the stock currently is trading at 24.8% below the fair value price or intrinsic value of the stock, which means this stock is undervalued and good for value investing in the stock. So we have checked the past performance. We have tried to understand the possibility of the future growth of the company. We check the financial health of the company, and then we check the valuation of the company. So broadly, the fundamental of Alphabet stock looks good. Let us straight away go to the price chart now to undertake the technical analysis to understand the historical price and volume action on this particular stock. Friends, do not forget to like this video. Now we will take an example of technical analysis of this particular stock for which we have done the fundamental analysis, that is Alphabet stock. So this is the monthly stock chart of Alphabet stock. What we can see on this price chart, these are indicating the price of the stock, and below you can see the volume of the particular stock, which means if you look at a glance, what you find, the stock is continuously making higher highs and higher lows kind of market structure, means the overall trend of this stock is bullish and rising continuously. Whenever correction takes place, if I look at the historical price action since November 2008, the price has taken support here, price has taken support here, once again the price has taken support here, and once again the price taken support here. So technical analysts, they look into the historical price action. So what we can conclude, whenever correction takes place, price takes support on this trend line. So various tools are used in technical analysis to understand the trend of the market, price action, at the same time volume analysis. So whenever price takes support on this trend line, makes a new high. Whenever price corrects, makes a new high. Once again, price has in a recent time has taken support on this particular trend line. So this is the area of value in this particular stock where we could have bought this stock for a very, very good gain in this stock. So we can decide to do even the pyramiding investing approach in Alphabet stock or Google stock. Whenever we, for example, we entered here, it has given a phenomenal return. Let us check how much return it has given after it has bounced back from a very, very important support area. So it has given a return of nearly 164%. So technical analyst looks into this aspect. If somebody has bought here, he will wait for the correction, and here he will add the quantity to do the pyramid investing for riding the trend in this stock and trailing the stop loss. If the stock gives a breakdown below this particular trend line, which is a rising trend line, the person may decide to book the profit and exit the market and wait for the future opportunity in the stock. So continuously market structure is higher highs and lows, and we can see there is an extent of participation exhibited by the volume, which means the market participation is increasing as the price has corrected and consolidated for several days over here. You can see the price was trading in a small range and then came out of this range, which means the correction has been halted and the trend resumption will take place. What is the original trend? Of course, is the upward. So price structure is likely to be higher highs and higher lows, and it is looking to make a new high, breaking this particular previous lifetime high in this particular stock. So extent of participation is exhibited by the volume. Volume can be considered as the fuel in the stock market that drives the price. If the extent of participation is more, which means demand of this particular stock is higher and more money is likely to flow in uptrending stock like Google, Alphabet we have seen in this stock. By now, you might have understood what is the fundamental analysis and what is the technical analysis. But at the same time, being a stock market beginner, you might be wondering which approach should you adopt. The simple answer is hybrid analysis approach is the best approach in my opinion. When you combine the fundamental analysis and technical analysis, the results could be very, very phenomenally great when you invest in the stock market or trade in the stock market. There are two ways to look into this aspect. In order to make money in the stock market, either you need to be a long-term investor or you need to be a trader. Could be a short-term trader or a positional trader. So in order to make an investment in the stock market for long-term perspective, you simply cannot ignore the fundamentals of the business in which you are investing. But as a trader, you can look into the technical analysis, and based on the inputs of the technical analysis, you can design a trading strategy to trade and manage the risk as per the principles of risk management. Even for investing, when we do the fundamental analysis, shortlist the fundamentally sound business, and then on those stocks, if we complete the technical analysis through price action analysis, volume analysis, trend analysis, and enter in the value zone based on the technical analysis, that result of investing or returns could be phenomenal in the stock market. So friends, this small tutorial on stock market regarding fundamental analysis versus technical analysis might have given you some kind of insights to begin with. Friends, do not forget to like the video. I'll be waiting for your comments in the comment section of this video. Subscribe the channel, hit the notification bell for more such videos on your channel. Thank you very much for watching. Looking forward to meet you very, very soon.